Hello, everyone. What a wild night. Wow. How now, brown cow? So, trading was great last night. I had Jeff, Hugo, Harris, Amira, Brock, all my trading warrior brothers and sisters. And so I went to sleep, and, there were really a lot of risk off going on last night. And, I pretty much flattened out. There were, great shorts, and if you took what Blake said seriously, and my philosophy in this environment is that you were just a scalper, okay, because try hold a position, you had ranges that you had a week's worth of range in last night's trading in almost everything. Right, here's gold, right? Look at this action, right? So you thought you had a, home run ball, and if you didn't book anything, here you are again, back in your face. Yesterday's turnaround Tuesday trade in silver worked for about 20 cents yesterday. Before that was here yesterday, little ABC, new high, divergence, collapse, and here we are again. So gold is still stronger than silver. Okay, the other feature that the market's finally starting to crack is 61.8. We're right there in crude oil. We had this last night. Okay. So we'll see, what the follow through is in energy as well. Pretty wild night in EG. I was bottom picking it, talking about 89.50. And when you look at a little bigger picture, so we had this throw under of the wedge, and then we went right to the top of the wedge and came back off. And I think EG has to hold right in here, this 88, 89.80 level, and close over 90 by Friday. And we get closes back over this high, 90.20. You're going to be looking at 91. Okay. So this to me, still held a piece, and looking to see how we close by Friday. I need a close for a 2-week reversal up here at 90.75, and we didn't get there. We didn't get close to that. I don't believe. Was that 90.75? Yeah, here's 2 weeks ago. 90.96. 90.96, and we only got up to 90.30. So that's up here. And the Dixie, you tell me what to do. And you could make a case that we diverged up here and we're heading back down. You can make a case that it held the breakout last night and then did this, and now we're back here. And you know what? The aftermath today is sloppier than last night. So I think the markets are still in a little bit of shock after having these kind of ranges. And out of the chute today, I really don't see anything I want to pull the trigger on. So if I'm out there hunting and trying to figure out what to do, the message most likely is I don't know what to do. And if I don't know what to do, oh, you did? Were you in Tripel? Were you in the chat room last night? Because, this is going to go on for a while, right? So, in my view, I've been thinking it's going to go the courts all along. And I think this kind of sews it up no matter what. Yeah, no matter what happens in Michigan and Pennsylvania, that this is a contested election. So if, it shows, unless Trump wins outright, then there's, there's no contesting. But if Joe Biden pulls it out with the late counting of votes, there's no way, President Trump said he's sending his lawyers in after the election. So they're already working. So this could stretch out for, everyone thinks, so once the vote count is over, it's over. This is inning number one. Okay. This is just the beginning. And everyone that was worried about social unrest happening on the election day or eve of, it's going to take them, people some time. And as time goes on, the anxiety, the anger, the frustration of one side or another is going to boil over. And if it goes to the Supreme Court, we'll see what they do. So that's my view. I would rather say I don't know what to do than mislead you. When I was a younger guy, I felt stupid if I didn't know what to do. And I would, create something to do. So maybe down the road today, I'll have some ideas, or maybe I'm just exhausted from last night. Last night was exhausting trading and in almost everything. The S&Ps, up here looked like they were, failing, came right to the breakout, held. Now we're here again. I mean, the metals action was, really pretty unbelievable. If I was to do anything in the metals, I'd short silver, be wrong over the highs up here. So I haven't done that yet, or maybe look for a reason to short oil because, it's struggling at the 61.8, hasn't made any progress since it tried it. With risk on, I'm not impressed with crude being up a half a buck. And, those are my views. That's the way I see it. Be careful out there, reduce leverage. And, you could always wait for the dust to settle. So I know what's great about being on the team at Forex Analytics. I don't even have to have an idea because look at all the ideas you have here. Look at this. They're everywhere. You have ideas everywhere. You have research everywhere. They even have a couple of pattern in plays that are working through all this volatility. Blaker's been bullish Aussie Kiwi, nice gain, and Greg is short the end looking for 102. So it's a great time to be part of our community because this is not a market for amateurs. Okay. It's not a market for amateurs. It's barely a market for pros, more like for high frequency traders. So, who's joining today? Who is? Raise your hand. You're in? Amira? When? From yesterday? Chat room on fire, Alexander says. Oh, for a while. Okay. Okay, great, Al. 2 months ago? Okay. Chad said it was a great week last night in the chat room. All right, I know what you mean by that, Chad. You have a session like last night is a week or a month's worth of action all packed in at the same time. So I want to thank everyone who's reciprocating our hard work here in Phase. That's free by becoming members. And, if you're not doing that and you're one of those people that doesn't want to pay for anything and only goes from free deal to free deal, when you're out there trying to sell something, don't be surprised if it's difficult for you to get paid because you're planting those seeds. You want to be able to get paid, you have to pay. You missed me in the chat room? Oh, okay. With all those warriors in there? I know Blake has been asking me to go in there for years. Anyway, Blake, I know that was your kind of night last night. How'd you do, bro?
I did okay. I did flat. I was actually flat. I wasn't, it was a pretty, when you're in a market like this, I hadn't really adjusted myself to it. So I was taking profits a little too early. And
Yeah,
I think the problem when you are in a situation where, um, you're in a situation where the things are moving so quick and move so big, you're used to pulling profits rather quickly.
yeah.
And that's kind of where I was at.
Yeah, you're not expecting the expanded ranges that
No,
happened.
I just, it seems like over the last several months, I've been so accustomed to just pulling profits quickly. I'd just rather do that.
Yeah,
And it's like, you get nervous and then, you know, yeah. So it's been, I'm kind of waiting for the dust to settle a little bit, but I'm also thinking, man, um, uh, it it's going to be an interesting market, moving forward. This is such a fluid situation that's happening, and I want to talk really quick about what's happening, but I think we got to start looking at what the risks are, to the market on a contested result, because that's where I think we're
yeah.
headed. And there's this here, let me pull this up really quick. Just give me a second. This is kind of what we're dealing with. And I sent, hold on really quick. Let me see if I have it here. Do I even have it? Oh yeah, I do. So this is kind of what we're dealing with right now. We have, just this is a some author that had wrote this actually on the first, but it's actually what's happening right now. Um, Trump was ahead in a lot of these states, but like these early voting ballots are being counted last in some of these toss-up states, and that's what Trump is like. He's like, hey, you know, this is, we stop counting the ballots, da 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 da. And this
Yeah.
is where we get into a situation where it starts becoming a possibly contested result. And things go to the Supreme Court, like you said, Dale. And that, I know the markets are up right now because they're thinking, oh yeah, look, but this is great because um, Biden's going to win, and then we're going to. I don't know if that's necessarily the path initially. We're getting into a situation where stocks might be a little volatile. And I see that stocks, you take the S&P, and we're I was sorry, I was just looking at the cable up here, but we're where's the S&P? We're looking at the S&P, and we're spiked up towards the overnight highs here, but can we break out? I kind of doubt we can, and I would be a little nervous being long stock, especially here at the 618 retracement. Which we're again flip flopping around in the middle of this range, and yes, it's a very very you know choppy market right now. But and here we are right at this 3,400. But man, I'll tell you, you got to be a little careful with risk appetite at these levels. I'm going to mark down just some levels because we obviously have to pay attention to them going into today. So the resistance that we need to pay attention to as far as equities go, I think we got to pay attention to the upper end, just in case something happens where I don't even know what's going to happen, because it's going to take days for some of these votes to be counted. Resistance is going to be 35 and a quarter. I doubt we're going to get up there for the S&P, but we've got to write it down. I'm going to write down actually 30. Hold on. 34.85. Oh, we just had ADP, by the way, just so you guys know. I didn't even see the data. Here it is. ADP, 365,000 jobs. We were looking for.
Oh, we're looking for 650. Sorry, I missed that.
50. So that's a miss, huh?
Yeah.
Big miss.
Yeah, it's a big miss. Well, that's not going to help risk at all. So going back into what I was saying here, and thanks, Stelios, and good morning. 34.85. I'm going to write down that first because we're right at resistance right now, right? So we got 34.85, and then after that we have 35. I'm just going to write down 35.25 because it's by the time you get up here, it could be 35.20. It's just we're right up against. We'll be up against resistance somewhere.
Hey, Blake, I wanted to ask your opinion. I know it's not in the bias chart, but one thing I did notice when I got up this morning was a huge gap down in yields. I don't know what was behind it since risk recovered, but you have like gap downs in the 10-year yield and 30-year yields.
I think that's a big deal, right?
Yeah, I mean, I haven't seen them gap like this. Move overnight like this in quite some time. I wondered, did the Fed say anything, or it's just people looking for cover? And
I was thinking, man, with this rally in the bond market and yields dropping, I was thinking to myself last night, I should be shorting the Aussie yen, but I didn't overnight. But that's what it seems like to me, that the market's looking for some, trying to look for some safety somewhere. But it's hard to say in this market. It's I'm sorry, I'm going to write down these numbers, Dale.
Brock's pretty smart. He says probable less supply because of the elections. I don't know. Because
there's definitely
stimulus.
I think that's right. There's a lot of volatility out there due to lack of liquidity. That's for sure.
Yeah. So I'm gonna let you go ahead.
Thanks. I wrote down a couple supports here, 33.25, which is right here. And then, down here, trendline support, which will be around 32.50. I think those are, we are mid-range. Make no bones about it, guys. We're like mid-range. So you got to be extra careful here as we're mid-range in this market. And like I said, I think you got to be a little careful about some risk off from current levels due to, some volatilities. Let's take a look at some of the majors. So the euros, we traded all the way down to 116, right back up towards 117.60. We've been all over the map in the euro dollar. And I would expect that this, if you look at the resistance here, or excuse me, the fib level here, okay, right? You have a 618 that comes up at 117.76. So I'm actually writing that down. And I know that's not the highs from overnight, but that's why you have to be really careful about chasing things because, because I think that if the euro takes out 117.60 and it makes new highs, you got to be real careful about trying to buy it up there, right? Support on dips. Let's try to get into an hourly. Well, we are in an hourly chart. It's pretty funny. Hourly 116.77. I think any dip back down or 116 and change. So, 116.10 is going to offer support, and I think that's pretty key because we've been down there and probed it, right? We probed below 116, and we've kind of been there, but held. All right, let's take a look at the cable. These are, again, real sloppy moves. And just, I want to be clear here. The markets have been really sloppy and, very messy. So just have to be really careful trying to figure out exactly where support and resistances are, because the turning points are obviously, overshooting a lot of technical levels, like in the cable here, 78% retracement overshot it. We probably did an overshoot of the 618 on the way down. Well, actually we hit the 78% retracement here. So then here's the previous trend line. which you could probably just do something like this. So I'm going to say big support here is 129.20. Resistance. I'm going to say any move back up to 131.15. Now, unless I see a definitive number, you just know that all these support and resistance levels are all very, just kind of in the area of this resistance. Now, I want to show you something that I showed guys and gals in our chat room earlier this morning, and I'm going to draw it out for you. So for those of you that like harmonics, this is intraday, so I didn't want to, I wasn't going to post on our harmonics tab, so I just did it in the chat room. So right here is this is a Gartley. So with the failure here at the, whoops, that's not what I wanted to do. As long as it stayed below 71.80, we should head back down again. That I just, it's where we're at right now. But you still have to give it up towards 72 cents. I mean, I'm going to write down 72 cents. I'm just showing you guys more on an intraday basis. That might hold. Okay, now we did keep in mind we broke this trend line and we've been up and down above and below it. So this trend line at this point in time doesn't matter. Whoops, I'm trying to get rid of that. So now support is going to be at 70, 50, and then I'm going to write down 2 levels. Because let's not forget that this market could go completely risk off today. I know, the markets are up right now and people are like, hey, it doesn't matter. Trump or Biden wins. Everything's good. No, if we go into a contested result, things are going to percolate. Like Dale said, we're going to start to see people get upset on both sides, whether you got extreme Democrats or extreme Republicans with guns in the United States, probably more so in middle America where there's a lot of militias, things could get a little scary. So, and we talked about it the last couple of days, but we are officially in that limbo area that now becomes more of a risk. And like I said, I know stocks are up right now, but I don't know. Okay. Let's go over to the Kiwi. So here's the Kiwi. Kiwi overshot this resistance, which I was like, okay, well, maybe we'll just negate the head and shoulder pattern, but no, we can't say that at this point. This right here is going to be our resistance, which is 67. I'm just going to write 67.45. And support, if for some reason we come back down and break through this support, which is 65.85, then we might see a breakdown in the Kiwi, especially that we took the stops above the highs, because that, when you do this, you take those stops above the highs, then that becomes more of a, problem. It, whacked all the longs. I'm just trying to delete this. Hold on. Okay. But still very volatile here. And you know what we probably should do is do this. And you can see this is the 618. So this is all going to be pretty important support right here. Okay. Where are we at? Dollar CAD. So big triangle. I know Amanda's in the chat room. She's been trying to pick it off down here. I think we have this support at the 78% retracement of this, not this move. 78% retracement of this move. We have a lot of support at 131. So I'm going to write down just 131, really key. That's got to really hold for bulls. Okay. We're coming right down to the 78% retracement. Actually, if you get it down to the the 88% retracement, that might take us down to 31.20. Okay. Resistance. Okay, let me check something really quick. That little false breakout there led to this sell-off, but that means that this 32, this is previous support. This is really big. 32.75 is really big resistance. Should we get back up there? Okay. Okay. Dollar Mexican peso. This thing's been all over the map. I mean, yeah, I mean, we rallied to 22, back down to 21. I mean, that's a big move for the dollar mex. Lot of I'm just gonna have to write down, you know, what you guys already know is the supports at 20.84. I mean, that's just big key support now. All right. Remember, if we go in a little bit of risk off environment, we could spike back up towards the 21.50, you know, 21.53 level. Oops, not 35. And then 22, obviously, because we've been there already. And it's very illiquid. You guys got to really be careful trading this one. I've tried to trade it a couple of different times, and I'm just trading super small because it's moving so fast. I mean, you could be sitting here, you know, 21.02, then you're at 21.08, and then you're at 22.25, like super quick, and there's no liquidity. So you just have to trade them really small if you're trading pairs like the dollar mex. Here's a Swissy, probably the most tame of the currencies right now, 91 and 92. Hey, didn't we write that down yesterday? That's amazing. And I'm going to do this. I'm also going to put down support as 0.9050 because that's right here. Right through here, this blue line right through here. Actually, I'll just write down 930 is where I'll go, just in case. I doubt we're going there today, but hell, you never know. In today's environment, you don't know. US dollar, Norwegian krona. This one, another one that's been all over the map. But look at how well we've held the 960 level. We even spiked up there overnight. Now, here's the thing. You want to know if this market's gone completely risk off? I'm going to tell you right now. If the US dollar Norwegian krona breaks out, if we break out here, just you should know at that point in time, we're going into the pooper. Be careful. Okay, that's it. You know, if the US dollar Norwegian krona starts breaking out, that you know that that's bad for risk. That's the way I'm looking at it, wholeheartedly.
It's a pearl, Blake, when you give someone an instrument that's going to give them a hint for the whole board.
Yeah, I think it's like, okay, hey, I'm just kind of, you know, I'm buying, you know,
Yeah,
I'm buying stocks here. I'm getting long. I think, you know, whatever, however you're trading it, it's just, you know, the US dollar Norwegian krona turns higher like that. I think you got to be really careful with risk appetite, but you know. Okay, so where's support today? Well, we're holding support. It's at the 618, which is 930. Then after that would be 923. So we'll and resistance, obviously, I just write down 960, and it's kind of something I have it on my screen at all times. So, and you notice we're keeping everything in range because that's just kind of how everything is.
Can you
Dollar.
put larger in front of range
Right.
or larger ranges?
Let's see, dollar index. $93.10, $92.75. $92.75 is obviously key because that's triangle resistance, right? Or triangle support right here. That means this 94. If we end up breaking 94.25, then that's obviously really bullish. We visited it last night, and we held. Okay, this will, if we broke that resistance, we'd instantly turn bullish here. That's just how it'd be. Dollar yen. Dollar yen. The guys in my office shorted dollar yen at 105.25 last night. I just didn't feel comfortable with it. And then, I mean, it just really kind of fluttered around. I say the guys in my office, a couple guys in our office did. And I'm like, man, I'm not comfortable with that. I'm just not comfortable going to bed with it, you know? And then, obviously implodes because it was just sitting around here around the, 105.10, 105. And and then it just imploded. So, but
Yeah, that's good that you're picky on who you go to bed with.
yeah.
I had the same. I had the
Were
same
you thinking
comment.
that, Steve? Huh?
Yeah, I was thinking that, don't go to bed with it, just trade it.
Well,
I'm glad
that's the
you guys
same
are
thing.
finding that humorous.
And when I was younger, that was the same thing, Steve.
As far as gold goes, I'm going to just finish this up because I'm going to pass it over to you and get back to the markets. So as far as gold goes, this is, and get back to the chat rooms, by the way. If you guys know, I was in the chat rooms till about 9:30 my time, which is about 11:30 Eastern. I'm like, nothing's going to really happen tonight. Most of the action is going to be today, and I still believe that. Anyway, gold, 1885, 1915. That's the 78% retracement of that move. So let's write that down. 1885, 1885, 1885. And what did I say? 1915. All right, Steve Stelios, that's done. I'm going to leave it here for a second for those of you guys who want to screen capture that. But man, what a night last night. It was, I mean, I like I said to Dale, I didn't trade it too well. I mean, I did, I had some good trades in there. It's just, I didn't hang on to things as, it's hard because I've been so used to scalping everything recently, to sit in the dollar Canadian when I was buying it, here at 130 last night, and then ride it out to 132.30, 100 pips higher. You're just not expecting it. And then, it rips up 40 pips and then I sell it. Then I, buy at a 10 pip dip and then I sell it for 20 pips higher. And it's like, man, if I would just buy these things or sell these things and just stick with it, with the original longer term idea, longer term being, a few hour idea, it worked out a lot better, but it's tough, So
It
how'd you guys
is very
fare
tough, and it's much better to err in the side of being cautious in days with conditions like that, especially since the main event is an election and the election is so tied up that you can get like news that some state is swinging the other way or whatever, and immediately you're going to get a market reaction. So yeah, I mean, somebody needs to be extremely nimble under such conditions.
Yeah, it's really important. You guys got to be really careful around here. So.
What troubles me even more, I mean, what makes it even harder actually, is that we've been in a period probably more or less since the previous election, I would say, that it's the first time that things don't necessarily make sense. Meaning, how many times during the past year, if somebody told you exactly what would happen on one thing or the other, you could even know exactly what was about to happen and still not know what the winning trade would be.
Good point. Blake, by the
Hey
way,
guys,
can you
I got to get rolling.
can you
I'm
show
sorry. I'd
can you
love to
show
sit here and
the
chit chat,
can you
but
show
I
the
gotta
vice
go.
chat? Can you show the vice chat just for 1 second so I can take a screenshot, please? Thank you, and done. Thank you. See you.
Okay. See you
Good
guys.
luck today,
mate.
Blake.
Thanks.
Hey, guys.
Hey, so
Hey,
interesting night. I'm actually very surprised that equities are going higher, because I always thought it was going to be a close race, but I thought the main question was, is it going to be a clean result or a contested result? And on the prospects of a contested result, I thought the risk is going to be getting sold, but clearly it isn't. So, Steve? What do you think? What do you think the markets are thinking now? Why is the risk going higher?
they're not.
They just think stimulus is coming either way.
I
Is
just
that it?
think that I just think that the markets in general have become most of the times completely numb to any type of event. I mean, it's amazing, but the buy the dip mentality is now above and beyond any type of news. I'm not saying, and here I need to make a parenthesis, if you ask me from a technical perspective, the markets are not broken. We said the exact same thing yesterday. I mean, if you look at the S&P, here it is, and if you look at the Nasdaq, purely from a technical perspective, what I still see here is a symmetrical triangle. The implication of such a formation are that the chances for a continuation in the previous direction of the trend are higher. Okay, having said that, I think that for the time being, we are at the worst possible outcome we could have had, having to do with risk conditions. Meaning, we have all the elements for a contested election result. It's more than clear that whoever wins is going to be by a small margin. We also have almost no chances whatsoever anymore, and correct me if I'm wrong about that, to have a blue wave or a red wave. The red wave was not on the board in any case, because I think the House of Representatives was never really, likely to swing to the Republicans. All the excuses for risk on. One excuse would be Trump cleanly winning, which means we're back to the status quo. The other excuse would be a blue wave, in which case, yes, taxes would go up, etc. But the counter argument was, yeah, but with Democrats controlling both Congress and the White House, they could pass, as much stimulus as they want. And, it was more than obvious that they want to, give a lot of fiscal stimulus to the market monetized by the Fed. So neither of those two are on the table, more or less, anymore. There is also a big chance that going through a contested election, there's going to be a gridlock about any type of stimulus for a period of time, and that should start affecting the numbers coming out from the economy for at least a period of time. So, yes, Stelio, I mean, there is no real explanation. So, fundamentally speaking, the little it matters anymore, because unfortunately that's the case. I would have to say that if you purely look at it from a fundamental perspective, I think risk should be sorted here. But from a technical perspective, as long as this triangle is alive,
they're coming for you.
Yeah, they're coming for me. Yeah, Katerina, hide the drugs.
But I guess that one thing that even if we do have, say, the Republicans controlling the Senate, I guess one thing that they do all agree on is stimulus. The question is the size of the stimulus.
Yeah, but Stelio, let me state it otherwise. How likely do you think that they will sit on the same table and agree on something.
Oh yeah,
If if tensions are extremely high, if they're going after each other in the Supreme Court,
yeah.
if there are riots and whatever else is happening. So, do they agree in principle on stimulus? Yes, they do. But, is this a situation that would help stimulus move forward? I don't think so.
Yeah, I think it's easier to play the blame game than to actually
Exactly.
sit down and do something constructive. But yeah, I mean, I'm not doing anything at the moment. I'm just trying to figure out what's happening. But
Well, I know both of you.
surprised.
I know both of you guys are gold bulls. I'm wondering what you think about the Sean Connery effect on the gold market because of his role in Goldfinger, and also he passed away. I say the name of his love interest in that? Okay, I will. Pussy Galore passed away, and the girl and the woman who was painted in gold passed away all this year. Do you think it's going to have any impact on the bullion market?
I think there are two likely things to happen with gold. One, it moves lower, in which case you should buy it. One, it breaks out, in which case you should buy it.
I knew that was coming. I knew it.
Okay. So as you see, I have a very binary opinion about
it's
gold.
Not even binary; it's singular.
Yeah. Right. I know. I'm joking.
I think that applies to most most real assets, and dare I say so, equities included. I think a lot of people are waiting for.
Exactly. Because don't forget, guys, that equities. I mean, excluding some ridiculous unicorns, etc. But equities, in any case, serious companies have real, tangible assets
exactly
that in nominal prices will appreciate with what's happening, right?
Yeah. So yeah, I'm personally just watching markets and the developments and see what happens. But otherwise, obviously the US elections are monopolizing the interest. We did have some numbers today, but really, who cares? Even ADP, big miss, but really nobody even blinked. So
yeah, I think nobody will pay any type of attention to any type of data as long as that's the case.
We have payrolls on Friday. That's going to move probably things a little bit, but
nobody's going to care again. Yeah, I mean, no matter how it comes out. The only thing, actually, to be honest, Stelio, if we get some kind of a worsening in payrolls, and the situation is still looking like we're going to have something contested, dragged out, etc., that might actually trigger the market to move lower. In what sense? That the market is going to feel that the need for immediate stimulus is probably more relevant than ever, and looking at the situation and seeing that under such conditions imminent stimulus is not coming might create even more jitters to market participants.
Yep.
One thing is for sure that and now this is a political comment actually, but it's not targeting one way or another. So one thing is for sure, there are a lot of people that believed that there's going to be a swipe from one side or the other. I mean, I was looking at my Twitter feed, like many Republicans thought that Trump is going to have a landslide win. I have no idea how that came to be, or the opposite for Biden. And to be honest, I was leaning more in the case that if somebody had a comfortable win, it would be Biden, because from my experience in polls, I thought that there is a much higher chance that after the 2016 poll fiasco, companies, shut down as they did in other places in Europe and found out what was wrong or what had changed, so their methodology didn't work that well anymore, and they could have actually readjusted it in a way that would capture actual sentiment much better than it did the previous time. So I was kind of surprised to find out that they were wrong again. But one thing is for sure, no matter who wins, it's going to be marginally, and that, for many and various reasons, is not a good thing. You know what I mean?
Yes. Yeah, I agree. Anyway, I don't have that much else to say. We just wait and see at the moment. Yeah.
Richard says the debt levels all over the world will need to be paid back over the long term, which means lower economic growth, all things being equal. That is 100% economically right. Especially for the USA, which could be looking at 1.5 to 2.5 range in normalized growth. I doubt it. I'm sure it's going to have such a nominal growth just because it will keep as many countries understating inflation. Because if you ask me, I don't really think we anymore have in Western in the Western world, quote unquote, positive real growth. It's just by understating somewhat inflation, you show that you have some type of a growth when in essence you don't. USA government debt to GDP is 145%, UK approaching 100%, Germany 50%. Yeah, you know something, these numbers though are not depicting the reality, Richard. In what sense? USA's debt 145% is very high. Many could claim that for many reasons it's not extreme, but you know what is extreme? Is the pace with which this debt is moving higher. So 145% is not the end of the world, but seeing where it was like 5 years ago, 10 years ago, you know, looking back like every 5 years, somebody easily realizes that 145% is literally just, you know, a screenshot of a moving train. And that's what worries me mostly. It's not the number per se, it's the trajectory that will make this number explode higher as it is exploding higher. And I see absolutely no element or no worry whatsoever from either side of the political spectrum that something has to happen with the trajectory of the debt. And unfortunately, and I'm saying this as an outsider, and I can't understand why, if there is one of the few things that both parties, for some reason, seem to be in 100% agreement, is that, you know, they shouldn't care about the deficits and the debts. Larry, I was watching yesterday live Larry Summers that was saying the same thing, and from the Republican Party they're saying like the same thing, and the Democrats are saying the same thing. And you know, the quote is, "This is not the time to worry about the debt and the deficit." And the question is,
when is it?
yes, when
Because
theoretically speaking, we were in an 11-year expansion,
exactly,
it wasn't the time to worry about the debts and deficits.
Yeah.
Now that we are in a depression, you want to say due to COVID, fine, due to COVID. I mean, of course it played a role, but my point being is that there were big problems anyhow that, you know, would bring a recession. But in any case, now that we're in a depression, it's not time to worry about them. So when exactly, I mean, can they at least agree what is the period and the conditions under which you should then worry about the deficit and the debts?
Yes, indeed. If you know, pre-COVID, it was all accelerating already. It's
Yes.
crazy, but it's supposed to be, you know, some of the best, not best, but good times, you know, good economic times for the US. But anyway, and now with COVID, obviously things are just exploded. So
yeah, so there isn't even a serious discussion about, okay,
yeah.
okay, this is not the time to worry about deficits and debts. Okay, let's say we agree on that. I don't, but let's say we agree on that. Shouldn't there be an agreement in advance? Okay, now we have to stimulate the economy, let's say. Okay, fine. Okay,
Yeah, what
do
are
we
the
do?
conditions for us
Yeah,
to
what are
actually
the
start thinking
conditions?
about it?
What do we do after? What is the plan? Nothing.
There
No
is
discussion.
no plan.
Nobody wants to worry about it. Yeah.
That's because everybody who is in the position to actually make the decisions, they have a certain term, and you know, they just want to make it to the end of their term without problems, and then they pass it along to the next person.
Yeah, which means, unfortunately, pass it along to the next generations. And at some point, the problem becomes that big that, you know, I can very easily speak to you about that, which isn't the topic of conversation today. So I'm going to go to the markets, but I can tell you that Greece went through this exact process. And, you know, everybody's going to be like, come on, give it a rest. I mean, who cares? I mean, what does Greece and US have to have in common? You know, not a lot of things. But I can tell you one thing. When you live beyond your means for decades, sooner or later, of course, in the case of the US, that has, so much economic might and military might and, so on and so forth. It's going to be later. And the world's reserve currency, it's going to be later. But at some point, deficits and debt come back to bite you, right? In the case of Greece, it was much sooner because, it lacked all the previous elements that I mentioned. In the case of the US, it's going to be much later, but being much later is not necessarily a good thing because the
Yep.
problem is going to be much bigger.
And how does it manifest itself? Well, here in Greece, we saw youth unemployment 50% before COVID. That's the
Yes.
problems you get. So,
Same with Italy, actually.
Yeah.
Spain, so on and so forth. So whoever thinks that the US is immune to such conditions, you'd rather think again. Anyhow, gold plans lower, completely unchanged on the day at the moment, back testing this triangle trendline resistance. Be careful. It might not do it now, but I really see a very resilient market that will end up breaking to the upside. Okay, is this a 100% given? No, because nothing is 100% in the markets and in life. But in all honesty, I think it's a very high probability trade. Now, consider yourself lucky if you see another leg lower towards 1880, 1820. That's even a better entry area. Same deal here with silver. I mean, might break out from here, might move lower towards 21. But I think the end result is going to be more or less the same. Crude oil.
Goldfinger.
Yes.
He's the man with the Midas touch.
Good one.
What do you think about crude rallying back to 61.8 back from this early week low? Could we roll over here? 61.8 back from the break.
I understand what you say. Might be the case, but in all honesty, if this is a bullish triangle in stocks,
yeah,
right? Oh, sorry.
Yeah, I know what you're saying. Yeah.
If this is a bullish triangle here in stocks, and we're going to find out quite soon if that's the case.
Yeah.
I would then expect that this purple channel was also the corrective channel in crude.
Yeah.
So if one happens, the other is going to happen as well, and vice versa.
Just something I noticed. I mean, we made these highs last night and crude had a little pullback, and then the rest of risk blew out to the upside, and crude is still struggling at the 61.8. Just an observation.
No. I'm with you, but it's very hard to call at the moment, knowing its good relationship with risk and being in a limbo in essence. These markets and under these conditions, there are two things you can do. One, scalp them, in which case you go to much lower time frames and trade formations that come up there. Second alternative is be very, very strongly biased about one way or another. I mean, having to do with the market's response. But even if that's the case, you need to have a specific risk set and specific risk parameter set, keeping in mind that these days can be a lot more volatile.
Yeah.
So you need to keep that in mind. Speaking of volatility, and Blake mentioned
I'll be right back, bro.
Yeah, absolutely. Speaking of volatility, and Blake did mention it, just look at USD CAD. Look at this candlestick that we've left behind. But the reason I wanted to mention USD CAD is, you remember I said the other day that I'm very much convinced. Now you have to put that in context again, in the sense that when I say convinced, it's not like 100% convinced, because there is no 100% convinced in the markets, right? But I feel very strongly about, it's a better expression, that this is a corrective move from the side of USD CAD. So I mean, it's clearly, this rebound clearly had no momentum, no strength. There was a chance that this, instead of a triangle, would be a channel, and there is still a small chance. But look at what we're doing at the moment. We're retesting again this 131 area. In my opinion, we break through 131, it's gone. I mean, USD CAD is going to be posting a lower low with the next area of support being at 127.50. So from an FX perspective, by the way, you can clearly understand that such a move would most likely come along with the scenario we were talking about, which fundamentally speaking, I have no idea how it's going to work under current conditions, but I've seen weird stuff happening during the past few years. But you can expect that more or less, if the S&P and the rest of the risk assets break to the upside, definitely USD CAD is going to be breaking to the downside, right? So also don't forget, there has been, in the past, it was much, much stronger, but there has been a good correlation between USD CAD and the VIX. The VIX has had quite a massive move lower, admittedly, right? I'm not saying the VIX can't move higher from here, but admittedly, especially under current conditions, it's quite impressive that the VIX has had a big move lower from the 40 plus high that it had. So these are things to pay attention, and at least we have some very clear technical formations. We don't have a trigger yet, and in these type of occasions, sometimes what you can best do is completely ignore what's happening and completely ignore what your logic tells you and just follow the formations, right? Because if you want to make sense out of how the market interprets political developments, I mean, if it was that easy, a lot of people would be making money out of it. Sometimes there is no sense, at least in the short to medium term. Everything makes sense in the long term at some point, but nobody has such a long-term horizon to actually trade like this. So bottom line, in my opinion, for example, if risk breaks higher from this triangle, you should focus less on what's happening from political developments and just trust that this is probably a valid move and it's going to lead to a higher high. If USD CAD breaks to the downside from that triangle, same thing. I mean, you can trade this breakdown and target 127.50, and don't just try to understand why this makes sense and why it doesn't. Otherwise, the other alternative is stay on the sidelines for a period of time, wait for the dust to settle and volatility to start being more logical and liquidity to come back in the markets, in which case it's safer to trade, or at least it's safer to trade using your usual leverage, because obviously during these days, if you want to participate, you'd probably want to use less leverage than you usually do. Okay. Let me go through some of your questions. By the way, another volatile move that we had was from the side of the USD Chinese yuan. We showed this the other day. Just look at it. Quite an interesting candle. Here it is. Look at this candlestick that we got.
Wow.
And if you remember, I mentioned it yesterday again. Be careful. I said, you can see big spikes. That's one example of a big spike. USD CAD was another example of a big spike.
They were all spikes.
Yeah. So,
if you like.
And I don't think we're done, Dale, with seeing spikes. I mean, for the day or whatever.
Yeah.
Or for the days ahead. So you need to keep that in mind and trade according to what's expected here. Let me see. Either way, long-term stimulus. I just want equities at nice price. That's all till I get long. I'm not sure you're going to get them at a nice price. Nice meaning that will make sense, will make you feel comfortable with buying. I mean, unfortunately, we are in such conditions that people that so far have been vindicated and are making money are people that are actually buying usually equities at eye-bleeding valuations, unfortunately. I mean, it makes no sense, but that's how it's been working for the time being.
Can you give us a quick look of at the euro pound? Very good action, reversal action yesterday.
Yeah, sure. Before I do that, a few
Okay.
things I wanted to talk about.
Okay,
Another
because you know
spike.
it's almost 6, but go ahead.
It's almost 6 your time. It's almost 4
Yo.
4 p.m. my time.
I'd rather be there. It's happy hour.
Yep. That's why they say it's always happy hour someplace in the world,
Yeah,
right?
I know. Every alcoholic says that. Yeah.
So in any case, look at USD yen. 104 holding and
Yeah.
holding and holding again, but
It don't look
you
good.
don't want to be long if it breaks, honestly.
No.
You don't. Because it's an air pocket and we can really find ourselves trading at 101.20, before you even, realize what happened.
Yeah, Gregor's got a nice pip on the short side again.
Speaking of which, look at the 10-year yields.
Yeah, it gapped, man.
Yeah, not only that, look at the
Yeah,
channel
it's
we're
going to
currently
break down
testing.
again.
If it breaks down, first of all, we can both agree, I assume, that this move higher has nothing impulsive to it, right?
Right.
I mean, like climbing higher in a very slow and choppy and annoying manner. Be careful.
Yeah.
Yields can really move lower here. Bonds can really explode higher here. In which case, as we showed before, USD yen is going to lose. The floor is going to drop off at 104. I mean, 104 is clearly defended, but if they lose it, then you can expect this to trigger a lot of market activity below 104.
It'd be very bullish gold too.
Yes, that is very, very correct. So these are a few things I wanted to show. And since you had that request about euro pound, here is euro pound. Guess what? Euro pound has found support once again in this formation. Very nice outside white candlestick so far on the day, stressing out so far because especially in days like today, I mean, currently looks like a very, very bullish candlestick, but who knows by the end of the day how this might look. To be fair, though, euro pound should be a lot less affected by whatever mood swings we get based on election results than anything that's dollar denominated, for example.
Yeah,
so,
probably more about cable weakness than anything else, is my view.
Yes, still this formation does not look bearish as long as it's holding. And if we do break above this trend line resistance, I think that inevitably we should shoot above 93 cents and get Stelios's
I was
position.
going to say that.
Triggered. So that's what I think about it.
Clearly, you can start scaling in there all the way up to 95.
Yeah, clearly, whatever you do, I'll reiterate once again, these are days that you should be careful. These are days that you can push your luck and, make a lot of money. But don't forget that it's always a double-edged sword. These are the days that you can push your luck and lose a lot of money.
So, I think we're going to get some clarity from Christopher Inks at Texas West Capital. And Chris, I've set you up. Thank you, Steve.
Thank you, Dale.
Great job by the team and some very wild volatility. So, Christopher, welcome back to Face, buddy.
All right, hey there, appreciate it.
Hey, what a great day to have you, as far as I'm concerned. I'm looking for some clarity. Did you enjoy last night, buddy?
It's the markets, right? So
yeah, all right. Okay.
I'm not sure there's really anything to enjoy from that. Everybody getting all kind of crazy and
a lot of people got chopped up in that.
Yeah. Let me get my screen up here. Sorry about this.
Okay, buddy.
Let me see.
So everyone, Christopher has been here. I think this is like your fourth time with us now, Chris.
Yeah, something like that. It's been quite a few times this year. And, if I had thought about it when you offered me to come back today and I thought about it being the day after the election, I might have put you off for a week.
Oh yeah, it's it's good to have you be challenged. So I mean, We're all challenged by
This-
this. Yeah, go ahead.
That clearly looks like the USD CAD that I was showing before. I know it's the DXY, so I'm assuming you're looking for at least one more leg lower in both cases,
Yeah,
right?
yeah. Previously when I spoken with Dale, we were talking about this low coming up down here, and we had a little bit of a different count, saying potentially a low. But we've got this three-wave advance coming off that, and then we pull
Right.
back below, which kind of sets it up into this, well, potentially a triangle. And then we have that what happened last night, which as you guys were talking about, we had this ridiculous candle here
Yeah.
for today. And so I'm actually kind of looking at this, even though it's still potentially a triangle, I think what we might end up getting is a WXY up here. So potentially, heading up there around 95. And I say that because if we jump on over here to the Euro USD over here, this is broken down. We were kind of watching this as a triangle as well. Obviously it makes up, 50% of that
Double
weighted.
zigzag, eh?
And so we've got that dip down below there. And so, there's no more triangle here, but again, looking at the three-wave decline, three-wave advance,
Double
potentially another
zigzag.
three-wave decline. I'm sorry?
It's a double zigzag, right?
Yeah, exactly. That's what I'm kind of looking at the moment. Obviously there's still, time for anything to kind of happen, but I think this is probably the strongest case at the moment, which means we would have one more up. And then, that should do it. I mean, if my count overall would have this then as a 3 up here, this is a 4 as a correction. And so we've got a 5th wave once this is done heading up. And so that would then, of course, jumping back over here to the dollar, that would take us down just that one more here. Now I've talked to a few people and then they tend to still be very bearish as far as the dollar goes. We were almost record bearish dollar levels over
Right.
here.
Right.
And since then it's kind of driven off a bit, but we never had we didn't have any real,
Yeah, we never
impulsive
really
advance coming
squeezed
off
the
that.
bears enough, did we?
Yeah, exactly. So I think we've got a little bit I think there's this whole jockeying over here. Some people are kind of going, oh, well, wait a minute. It may actually be reversing, and others are trying to be staunchly bearish. And so you get this kind of overlapping correction thing going on. I think you need one more drop down to kind of get their attention and then reverse on up. And of course, if that's popping up there, that changes everything in terms of, what you'd be looking at for the, the stock market.
Could we go to 95.50 and then break to new lows?
Yeah, I think that's probably that right there is just that 100% extension off of
Okay.
WXY here. So at that
Right.
point, Y would be equal to W.
Right.
My only caveat I have with this is this descending channel here.
Yeah.
And based on that channel there, we've got a channel target up here of around, what is that up there around 98, which kind of gets us to the equilibrium here of this structure. And so I've got that still in the back of my head. It doesn't have to stop right here.
Yeah.
At 100%. It could extend further. That's quite a big extension though. So again, as I say, there's a lot of iffiness, going on right now. And then these are just kind of where we're looking at. So, first thing is, do we get the triangle? If we don't get that, we're looking, minimum right here about 95.5. If we continue up beyond there, then I'm kind of looking at this level up here. And then, I'll kind of reevaluate what kind of structure we've got playing out here.
Yeah, that looks like the battleground to me looks like 96, 97. And if we fail from there, we could have quite a bear market from there, don't you think?
Yeah. I mean, I think, other than, potentially just this 5th wave, I'm going off if I zoom out back here a little bit. I'm kind of looking this as a, as we kind of talked about before, I've got this one and then this expanded flat is what I'm looking at right here.
Mm-hmm.
Now, obviously, this whole area right here leaves it up to interpretation a little bit. There's a couple of different counts you can kind of get out of that. Right now, I think this makes the most sense. I know most people right now are very, they're very bearish on the dollar because, the government's talking about QE, and all this QE spending going on and whatnot. But if we look at what QE really is, I mean, for the most part, you're talking about asset price inflation, and then you're talking about bank reserves, basically. The money goes into the Fed Reserve to give the banks a cushion to go out there to encourage them to loan. And the problem is the banks haven't been loaning. They've curbed their loaning during all this time. So even as QE was going out there, less money was actually entering the system. And, so if you're doing that, then it doesn't matter how much money is actually being printed, so to speak, if it's not getting out and circulating. And therein lies the issue. But everybody says, okay, well, QE is going on. Government's printing all this money. So, the value of the dollar has to decline. It's going to bust. Honestly, we've been doing this such a long time. I don't know that we're going to have a dollar bust or anything, something that it just completely dies off. But I think people are getting a little ahead of themselves with that.
Okay, so to clarify, you think there's still potential before we go to C or 2 down there at 90 that we could head up and squeeze the bears over 94 20, 94.80, that W and A point up there, and then fail after a rally? Or you think a breakdown is imminent right now?
Oh, no. I don't even, I think it's definitely possible that we could have that squeeze up.
Yeah. Okay.
Like I said, I was much more into this triangle idea prior to last night. And then with the euro kind of breaking down with its triangle,
right.
And then of course, you guys were already talking about the USD CAD. I traded that last night as well. And so we've been trading that pretty well off the bottom here, but when you're looking at all that, the euro making such a big part of that weighted basket against the dollar there, that we generally tend to find, that they kind of
mirror,
move opposite. Yeah, exactly. Mirror of each other. So its breakdown kind of suggests that the dollar is likely to head up there a bit higher anyway. But again, at the end of the day, we kind of talk about, on the side of caution here because you've only got this 3-wave advance, but realistically 3 waves up could be a leading diagonal. And so this could actually be a 1-2, and then you get 3 up for a 3, back for a 4, and 3 up for a 5. And so you get this ascending wedge kind of thing potentially. And so if we get that, then you're talking about this being the bottom here, back to my original count from last time, back in the summer when I talked with you.
Right.
So I don't think there's any real, everybody's very, very positive, more so about what they think is going to happen. And I think that we're a much more, we should be much more cautious about what we think is definitely going to happen right now.
Yeah. Well, you like W.D. Gann said it all, didn't he? That if you don't learn how to change your mind, you won't have any change left.
Oh, exactly.
Yeah. So I know you study Gann. So, I mean, I have that written down because I used to be kind of a stubborn trader, and now I have no problem flipping. In fact, you know what, Chris? Sometimes I have to be the wrong way to know to go the right way.
Yeah.
Have you ever experienced that? I mean, you put positions on, and when the market's going in your direction, it's a struggle, and it kind of tells you that, you're to take another look because it's not performing the way you thought it would. And, sometimes you have to reverse.
Oh, definitely. Yeah. And I think unfortunately, as you know, it's one of the hardest things to do, as a trader, because, we're humans, we've got emotions, and, we want things to go the way we want them because we all want to make money, right?
Yeah. Well,
so, it can get kind of
the
crazy.
most important word for a trader for me, Chris, is next.
Next. Yes.
Don't you think? I mean, instead of, doing a post-mortem on everything that went wrong and going fetal on your couch. So, or when you're right, doing cartwheels in the room, it's, don't you kind of want to just get to every trade is just another trade?
It's just another trade. That's right. I mean, at the end of the day, we just got to kind of get to ourselves and say, well, you know what? We're going to make mistakes. We're human beings. We are infallible, or we are fallible by design, infinitely fallible. The odds are we're going to be more wrong than we're ever going to be right, not just in the markets, but in life. So, if we accept that and we use proper risk management.
I could confirm the life part. Let me ask you this. I think the big question, especially after the recovery in stock indexes, Chris,
Mhm.
was last week's break more important than this week's recovery?
Um, okay, let me go ahead and pull up here. So if we're looking at the stocks here, I mean, if we zoom out and take a bigger look at it, this is the Nasdaq here, the NDX.
Yeah.
And I believe last time I was talking with you, we were talking about how the NDX was leading. We continued pushing up while everybody else was lagging. And
Yeah.
I said, well, once we have that breakdown, I think we're likely to see the NDX leading on the
Yeah.
decline. And so far, that's what we're getting. So, at this point right now, I'm really pretty bearish right now on the stock market overall. This here is my, my obviously my larger count here. But if we get a breakdown below this swing low over here that I've got labeled as B, so this is that 10,677.85. I mean, I think that pretty much just seals it. I think that's, it's down and going there. You've got a possible double top up here, a little bit higher than I'd like the difference between them, but possible nonetheless. Based on this count here, we've got this expanded flat kind of going on. That gets us a minimum 5 down here to around 94.34. And, that 5 is just 1 on the way down. And that would kind of align with the idea that, again,
the dollar's going up
for this year, that we're at this kind of credit bubble popping coming off of that. And so,
okay.
I mean, that's kind of what I'm looking at the moment there. And the other charts, the other indexes really are too different. We can jump over here real quick. Let me see here. We got the E-minis up here. Same basic idea. I think more or less this red line here is really kind of the area. As you can see, we have the resistance and support again. So if we're dropping down through that, especially below that wave 1 there, that just opens that move down to at least 2760 and a half, at least.
Okay.
Going
interesting
down there.
look. Yeah. So really the red line is really a red line for the bulls on all the stock index charts that you
I think so, more or less. Yeah, it's that area right there.
Yeah.
Whether you look at the NDX or the DJI or the S&P or anything like that. So
okay.
Big picture is we're just kind of moving sideways at the moment, but we remain really vulnerable to that breakdown there. And if we get that, I don't see how it gets positive after that for any length of time. I think that really kind of says we're headed down.
And from you and your work, and some things I notice in the gold silver ratio, you were leaning towards silver showing less relative strength. I mean, gold taking out its 2011 highs, and even though silver was spectacular on that rally, not close to those highs. So, and silver has been underperforming gold the last few weeks. I mean, it's my preferred short if I want to short metals. I'm wondering if you see a continuation of that, or maybe your view has changed between the two.
No, not at all. Again, we talked last time about how silver generally leads gold, and then how it didn't
right
up there in this, and then so that gives us this likely move down here. Let me see here. Oh, this is not the right chart. Let me see if I can find my right chart here. Let's go look at that one right there. I mean, again, my gold and my silver, I'm still looking at them down overall, headed down. I don't see any reason to be excited about them at the moment. I've got now, with the silver chart here, I've got 2 counts. I've got the black count and this red count.
Yeah.
Kind of watching how this plays out here. But in either case, it does just kind of set us lower. And again, still looking.
So you think we could have a C rally up to about 27 on your last count?
Let me zoom in.
Last chart you had there, I saw a C up there.
On this one here? Yeah, right here.
Yeah,
potentially. If we're watching this red count here, if we've got a 1 done here, basically just a 1, 2, 3, 4, and a 5. At this point up here around 26 and a half or so, wave C would be equal to wave A.
I see.
So we would have basically a 1 I don't know. I guess we're gonna look at this to be a 1-2 right here. So let's see if we can get a little bit closer, better idea of where we'd be looking at here. Let's see here. Yeah, maybe a little bit higher, potentially up to around 27, 34 and a half or so.
Okay.
If we
And
get
your
that as a
bearish, yeah, and your bearish count is, we've already peaked and we're heading down now.
Yeah. So if I look at what I'm looking at here, again, as we've been talking about previously, we get this B wave ends up here, and then we look for a C wave coming down here toward about 5.5 or so
Wow.
from that. So we've got the A low down over here back in December of 15,
Yeah.
followed by that B up, and then that C down. And for gold, it's not really any different on that. If I jump over here, let's see. Oh, where's my gold chart? There it is. So, I mean, locally on gold here, again, the idea being this is wave B top up here. Let me zoom out real quick, the bigger chart. There we go. So, I mean, bigger chart here says A, B. We get a C down here around, 850, 950 kind of area. That gives us this expanded flat. And then zooming in there to where we're at here locally. Again, looking for the drop down below this swing low. And I think if we get that pretty much, what is this here? This 1848 kind of area.
Oh yeah. Okay.
Yeah, I think if we're dropping below that, I think that just kind of seals it down.
And the alternate would be some type of fib retracement off of the pullback we've had, a C wave up there.
Say that one more time. I'm sorry.
The alternate would be a C wave back over this 1910-20 level, get up to 7. You have resistance above it. So
like this, like an A, B, C. Is that what you're thinking? Yeah, exactly. Yeah, I mean, this, it looks completely corrective at the moment here.
Right.
We've got the resistance, the support here, which is working as resistance there. So I could see a push up potentially in that a little bit, but not overly excited about it.
Okay.
I mean, right now, if we look at this, we can get like an A and then a B as a triangle and this being a C here. So let's get you one. And then, like you said, A, B, C gets your B, and then you have a C coming up. So in that case, you'd be looking potentially, a minimum there of about 1942 or so.
Okay.
That gets you wave C would be equal to wave A. Obviously can go more than that, but that would just be a 1-to-1 ratio there at least. And that gets you, where you kind of would expect to get caught. I mean, if this is going to head down, as bear markets, you drop down, you pull up, you hit resistance, and you continue further down. So
without it being impulsive? I mean,
I'm sorry?
why are you, because I know you're a wave guy. Why are you bearish gold with this all being corrective to the downside and not really being impulsive, except for the first break off the high? You consider?
Well, again, for me, it all goes back to my original count, which has that, this B ending up here and heading down.
Yeah.
Which is why then I said, you want to see this breakdown of this right here.
Okay.
So if we kind of zoom in here a bit, actually, you know what? I've got let me see here. Let me pull up my actual gold chart that I usually use here. Let's see. So again, kind of like what we've got with silver, we've got the same idea of two possible counts here. We've got the red count and the black count.
Right.
And so, looking on that, if we look at that, basically what we have is a triangle there on that larger picture could potentially just be this 1-2. And then we're working on a 1-2 and then a 1-2 here coming down. So basically just a lot of consolidation here. And so if this kind of plays out, we don't actually have a triangle right here, but what we have is a congestion, a backup that should see a strong move down. If that's what it actually is here, this 1-2 kind of idea. Just this backing keeps trying and then finally gives up, and you should see a strong drop down. If it is this other count.
Okay. You have a view on oil? Recently had a pretty big break to $33 and has recovered about 61.8 here. Do you do much in WTI?
Yeah, man. WTI, let's find it here.
I see
There
it's
we
on the
go.
bottom. Yeah.
There we go. Okay. Yeah, I mean, big picture on this. I've got a first wave completion up there at that high back there in August.
Right.
This has been a bit corrective here. I've got it could potentially be done here. We've got 5 waves down from this B wave swing high here.
Yeah.
It dips below this kind of this channel here.
Right.
But I'm not convinced yet. So I've got this other count here which says, okay, maybe we've got the A and the B, and then we've only got one of C done right here.
I see.
And that's what I'm
Okay.
kind of looking at for here is do we get this break back down? Because if we do, then, we're looking at probably further down here toward the low to mid 20s to finish that off.
Okay.
My only other side to that is that we had this huge drop down here. And so prior
Yeah.
to this huge drop, I was looking at this being a 3, this drop that we had that close down there around negative 37.
Yeah.
Being a 3rd wave, this move up would be a 4th wave, and then we'd have a 5th wave. And I'm not convinced that won't happen yet. And that kind of, freaks some people out because that would mean, hey, we're going to have
Negative
another
100.
contract that closes negatively.
Yeah.
Um,
Okay.
But if we look at what's going on around the world, then, if we look at the economy, and if it does this broader decline that I've been talking about for a while, I think that's definitely possible. We've still got a glut of supply, across the world. Part of the issue we had when we had this decline back here was the fact that, if you're trading WTI contracts and you're holding a contract when it closes, you absolutely have to accept delivery of oil,
Yeah.
versus Brent crude where you can, settle in cash. So the problem came that there in May, your big buyers of oil, your airlines, your cruise ships were like, well, usually they buy ahead, but they were like, well, we've got this pandemic going on. Nobody's doing these things, so we don't need it. And so there's this
Yeah.
glut of oil sitting there now, and nobody has anywhere to put it because the storage is basically at that point, I think it was something like 80% of the world's storage was used already. And if you're doing WTI, the oil is actually transferred via pipeline. And so even at Cushing, where we have the major hub there was supposedly no room to store oil. So you've got the supply of oil, nobody needs oil, and you've got people trying to get rid of these contracts. And so that's why you get that dip down there. Well, I mean, nothing's really changed since then. And now you've got the Saudis who can, they can produce really cheap oil. And, they appear to be setting up to really take advantage of the situation here to kind of leverage that and really kind of gain, that oil market share. Because here in the US, the only reason we did so well for so long was because we had cheap money. We became this top producer of oil because of fracking
Right.
and this pulling it out that way. But that's a very expensive way of getting oil out of the ground. But again, with all the loose money for the last, 5 to 10 years.
All right. I was just playing pipeline.
Oh, yeah. So, we had all that. So now we don't have that anymore.
Yeah.
And I know, Trump said this thing recently here where he said, we're going to save the oil industry and all this basically. But, what do you do if there's no demand? And the way we were doing so well was because of extremely loose money that makes the very expensive way of pulling oil out of the ground, able to do. I mean,
Right.
and you have nowhere
Yeah.
to store it. I mean, what is it really that he can do? And so, I see the possibility there, especially if this economic conditions continue to deteriorate.
With COVID, another wave in COVID globally and stuff. Yeah.
Yeah, and the thing is, we don't even have to. I know there's a lot of people out there, that say, "Oh, it's not a thing," and other people, "Oh, yeah, it's definitely a thing." And at the end of the day, it really doesn't matter. It's what is government's response to it? That's what matters. And a government's response, as we've seen prior, is going to be pretty extreme when it does it. So if government believes there's this, COVID's continuing to advance and whatever, the government's going to do what's going to do, which is going to end up hurting, business, which is, I just don't see how oil ends up going up in that respect.
Yeah, it would take some type of geopolitical event in the Straits of Hormuz or something. So, Chris, I love your work. Okay, buddy, I respect it. And so if I do, I wouldn't be surprised if there's a few other people that do as well. What's the best way, and probably more, the best way for people to follow you besides Twitter at Texas West Capital? You want to show your website and what you offer?
Yeah.
do?
We can just jump
This is
that up.
your commercial, bro.
Is my commercial?
Yeah.
All right. Well, we can jump on over there to howtotradetowin.com. Let me see if I can pull this up here. They got it sitting up here. Pulling up there. Man, I tell you what, sometimes it doesn't pay
To get
me.
up.
Yeah,
To be you.
I tell you what, man, sometimes I just
There
have
you go.
trouble. I don't know why I have trouble with electronics sometimes. I love it, but man.
Yeah. All
But
right,
yeah, you
so
can jump on over
there
here
it
to
is.
howtotradetowin.com.
All right. And that's the website, www.tradetowin.com.
Howtotradetowin.com. Exactly. And you kind of see everything we do there. A lot of education. At the end of the day, I think what a lot of people find online is they're looking for somebody to tell them where to buy and sell. But, as you know, we're all different. And the things that make us who we are as traders or investors is different between each of us. So, even when somebody says this is a good place to buy, depending on who you are, it may not be the best place for you to buy. So everything we do starts with education first. It's explaining how and why the market moves the way it does, how to use indicators and things properly, different ways of looking at the market so that you can, risk management, big thing on risk management. So that way you can kind of figure out who you are.
Yeah.
And then find out how to best trade for yourself. Yeah.
Yeah. People don't learn if you click the mouse for them.
That's right. And what happens if you're not there one day?
Yeah. What if you're retired on a tropical island and they go, well, I don't know what to do because Chris isn't around. So,
Exactly.
Chris, I want to thank you for being here the day after a wild night. I'm sure, if you're like me, you were, involved last night, and I really appreciate your work and you coming here to edify our community. Thank you, my trading warrior brother.
I appreciate it, man. Thank you so much.
All right, everyone, that's Christopher Inks, and you can follow him at Texas West Capital, and you could find him at www.tradetowin.com. That's a wrap. Today's Wednesday, I believe, and we'll see everyone tomorrow. Tomorrow, Peter Goldstein will be with us. Thanks again so much, Chris.
All right, take care, Dale.
All right, bro. And that's a wrap. Remember, don't just count your pips, count your blessings. You're welcome, Didier. Trepal, you're very welcome, and we'll see everyone tomorrow. Adios. You're welcome, money.